Hey guys, Ruben Tech here. Today we're going to be looking at Netflix. Netflix just had a huge jump, 30% in the last 3 months, and most of that just coming today. They knocked it out of the park. For stock that traded flat today, it's been trading down for the past month. All of a sudden, boom, it jumps up 14.14% after hours, $123. So congrats to you if you're involved in this. I'd like to give you a hand. These are phenomenal numbers. Their earnings report was, simply put, it was just fantastic. So came up here, we see revenue grew 16% year over year. Operating margin expanded 6 points to 27%. That's great. That means they got more bang for their buck. A lot of people are criticizing big tech for all these layoffs, but the truth is, if you're a financial investor, at least if you're a Soros, Buffett, traditional financial investor, you like these kind of things. If you're a Tesla, more modern guy, and I'm not knocking that stuff, then you don't really care about numbers. You just invest in whatever feeling. You just feel stuff, so you just invest in, I feel this stuff is going to be good. But for those of us that actually like numbers, yeah, we love to see revenue grow double digits while they're cutting costs. And when I say cutting costs, they're technically not cutting costs. They're getting more out of their dollar. They're spending more money, but they're getting more out of their dollar. I should put it like that. You could say it's cost cutting in a way, I guess. Maybe cost cutting would be a reduction though. But this is like more bang for the buck. Because I'm sure their expenses went up. There's no way that they had less if they grew 16%. I guess I shouldn't say that. I don't know 100%. Jake Paul versus Mike Tyson. Look at this. This is disgusting. This was a pixelated, slow disaster. They shouldn't mention this. This is terrible that they would even mention it. Forecast for 2025. Okay, healthy growth. Operating margin of 29%. So they look like they're going to keep extrapolating more out of the dollar. That's good. Despite the strength of the U.S. dollar, they are a global company. I believe overseas market is fairly large for them. 10.2 billion in revenue versus 8.8. That's very nice. 2.2 versus 1.5 operating income. Operating margin, that's very nice, obviously. Again, getting more bang for the buck. 22.2 versus 16.9. And net income of 1.8 versus 938 quarter over quarter. And that doesn't make sense. This is 22. This is 16, 22. This is like 100%. I should have looked into this prior. Oh, well, don't worry, guys. We're just here for the lulls, right? 15% up, or almost 15, 14.14. Diluted EPS 4.27 to 2.11. Yeah, well, when your net income's coming over 100% over the year over year, there had to be a reason for this. Maybe a tax payment. Maybe they got some interest income on some bonds or something like that. I mean, that's a big number. You wouldn't expect that. You would be expecting like 1 point, probably is somewhat in line with this, so a fifth, like 1.3, 1.2. Global paid members 300. First time they crossed over 300. Very nice. Year-over-year growth 15.9%. Net cash provided 1.5 billion to 1.6. Cash is down a little bit. I do think they're buying back shares. I remember seeing something on TV about that. Revenue in Q4 increased 16% year over year or 90% of foreign exchange. Wow, that's interesting because the dollar is strengthening. This was slightly above our beginning of quarter forecast despite the strengthening. Yeah, okay, so the next line, they even mentioned that. Despite the strengthening. So yeah, this is interesting, but despite the strengthening, they were able to increase that 90%. That's very good. Most currencies' as membership growth and ad sales outpaced our forecast. So probably on ad revenue did very well. Average paid membership rose 15% year over year. And this is their marketing was up 1% year over year, 3% on an FX neutral. How is this possible with the strengthening dollar that they were able? I don't know. Well, they're mentioned it above, so they did something. And Q4 membership growth was driven by broad strength across our content slate because it'd be 1%. They're saying here, but 3% on I don't know. Operating income total 2.3 billion. Up 52% year over year, and operating margin was operating income 52%. What? Operating income 2.2. Oh yeah. So you're comparing to this. This is quarter to quarter. So 2.2, 50%. Sorry. So for this, we should have been expecting 1.4. Still more, but not quite that. EPS amounted to 4.27 versus 2.11 last year, 102% year over year. That's interesting, but what was it that drove that? I'd like to know what drove that. Wouldn't you guys like to know? That headwinds from the strengthening US dollar over the last few months. Okay, since the forecast we published with our Q3 2024 results, the appreciation of US dollar versus most currencies has negatively impacted our 2025 revenue forecast by $1 billion net of hedging. This FX impact is included in our updated guidance. Okay. But how did they do so well this year, though? 14% FX neutral, which is moderately below our full year guidance due to the timing and pricing change and seasonality of our ad business. Okay. All right, we're not going to worry about 2025. This is an interesting report. Very interesting. Cash flow. Anybody interested in cash flow? I mean, yeah, I doubt it. Okay, during 2024, we repurchased 9.9 million shares. Wow, for $6.2 billion and $12.9 billion. So that means they have been buying back a lot of shares. Our board has approved an incremental $15 billion more for our program, which brings our total buyback authorization to 17.1. Also, they're almost done with this money. We got 2.1 billion left. For 2025, assume free cash flow of 8 billion for the year. Our forecast assumes cash content spend of roughly 18 billion and estimated 800 million in cash outflows. Typical annual tax obligations. We expect to pay down 1.8 billion in bonds that mature during the year using our proceeds from our investment grade debt offering in 20. Oh, this is interesting. But that isn't income, is it? I'm trying to think if that would affect net income. But it shouldn't. I don't think you count that as income. Well, wait, though, because it would be expense when you pay it. Or is that just somebody here in the channel, if you have a detailed financial background or accounting background, let me know how that would work. Because this would just be under cash flow and capital structure. When you issue bonds, you're not getting income, are you? No. And when you pay them down, that's not an expense, is it? I don't believe it is. I don't know. Long-term stock price performance, we're not going to worry about that. So annualized performance is beating the S&P by 7%. And then cumulative return, this is split adjusted, IPO price, blah, blah, blah. It's almost double the S&P over the last 5 years. Pretty nice. FX neutral operating margin disclosure, we're not going to worry about that. Let's just get to the regular numbers. Okay, here we go. Revenues, December 10. 12 months ended. No, we're not going to look at that. So 10 to 8, 5 to 5. Cost of revenue virtually. So acquisition cost was almost unchanged. Wow. 976 to 916, 776 to 6. Yeah, so they really controlled costs. Look at this. General administrative, almost the same. So yeah, operating income greatly benefited from that. Interest expense. So, okay. So this would be the interest that they pay on those bonds, right? Right? Is that right? So that does count as this. So interest and other income. So if they issue new bonds, does this count as income? Interesting. I don't know. I mean, that would explain this because look at this. This is huge. This is 54 million. 172 million. So that's a $220 million swing. You know, and you're talking 1.8. Take that 220 million out of there, you're at 1.6, and we were expecting about what, 1.4? So it's a lot closer, right? I mean, they didn't pay much for income tax, so they did something tax-wise. Look at this, 210 versus 265. Yes, EPS just knocked it out of the park. Holy cow. From last year, this. And I can't tell you, I believe this quarter, I remember looking at this a while ago, this is their weakest quarter of the year, traditionally. What else we got here? Well, I don't think there's anything else too interesting, right? Common stock, 6 million. Stockholder equity, treasury stock. Retained earnings. Accumulated other comprehensive income loss. Look at this. What would this be? It's interesting. I should learn a little bit more about this stuff. I am not a financial advisor. Other current assets. Accounts payable. What? Wait, what? What? Wait. Okay. Repurchase of common stock. For year over year, 6.2 to 6. Okay, so they bought 12. Wow, 12 billion in the last 2 years. That's insane. But proceeds from issuance. So it's like, what's this? They're paying their executives and then they got to write that down? Because they're obviously not issuing it to the general public, right? I mean, this is $302 million. This is probably to executives. Does anybody know about that? If you know, let me know. Interesting. Okay, so anyways, very interesting. Here we got Netflix crushing it. 14% still. If you got in, congratulations. Have a great day.